for today's webinar, Contracting with the Federal Government, Business Systems Rule. Our speaker today is John Stunson. John is a practice lead for Auxis' Government Contract Services Group. John has over 15 years experience in providing compliance and process improvement related services. Prior to joining Auxis, John worked for Ernst & Young's Government Contract Services. Extending his government contract experience at Auxis, John is now focusing his efforts in identifying gaps and implementing solutions for construction-related firms as they work to get into compliance with the business systems rule. And with that, I'll turn it over to John.
Hello, everyone. Thank you for joining. Appreciate having you join this. And this webinar is supposed to get you up to speed on the business systems rule. What's the current status and what is going on with it, and how will you be affected? So at the end of this webinar, you'll understand the application of the business systems to government contractors, compliance considerations, impacts for noncompliance, and suggested approaches that we suggest towards getting you compliant. All right, so let's talk about what the rule is. The Defense Federal Acquisition Regulation Supplement, DFARS, will have a significant impact for many federal contractors. So the Federal Acquisition Regulation 52-203-13, called the Contractor Code of Business Ethics and Conduct, sets forth compliance requirements for entities. So who are these entities that are going to be they qualify? So it's federal contractors that receive awards under cost reimbursable, incentive, time and materials, labor hours, and fixed price contracts which provide progress payments and or percentage of stage completion. That last part, that fixed price contracts, that's new. That's pretty huge because a lot of companies have been able to fly under the radar of government red tape before. So this is what makes the business systems rule so unique. Additionally, what applies are federally funded state contractors who have federal flow-down provisions. A lot of money has come in from the federal government going to the state, and oftentimes state contracts flow down federal provisions. Okay, so among other requirements, this rule requires an internal control system that adheres to quote-unquote special requirements of government contracting. So what is special requirements? We'll get into that, but that's very subjective and it's also very unique to government contracting. It's not just financial compliance. It's not just Sarbanes-Oxley type requirements. There's a whole bunch of things that are, as federal contractors will know, are unique to the government contracting world. So where are the teeth in this regulation? So under this new regulation, each deficiency may result in 5% withholding of contract payments until it's remediated. Cumulative withholdings for multiple deficiencies can be up to 10%. And there's additional future and current contract awards may have additional penalties apply that the government can make additional considerations, additional penalties like withhold future contracts, those type of things if you're deemed not a responsible contractor. So the long and short of it is a lot of private contractors in this architectural, engineering, and construction firm can no longer rely on hard bids to avoid government regulatory compliance requirements. So that's the real thrust of it. This industry, especially the construction industry and the professional services industry for that matter, will really be affected by this because a lot of times they have flown under the radar by doing hard bids. Okay, so let's give you kind of a snapshot of what has happened for the rule. So starting in December 24, 2007, the initial regulation came out right on Christmas Eve. Key elements included codes of business ethics and an internal control system that facilitated timely discovery of improper conduct and ensures that corrective actions are promptly instituted and carried out. Pretty straightforward internal control system for that, but it had limitations, and those limitations were addressed in December 12, 2008, when they did a regulatory change called the Close the Contractor Fraud Loophole Act, which is kind of a unique name. So this applies the code of ethics to contractors, commercial and international contracts. So it's no longer just federal government contracts. This is now government, commercial, and international. So this basically applies to your whole business system as opposed to just your federal contracting system. So this now calls into question not just the contractual requirements, but actually your business system, your internal controls for your entire system. It's kind of unique, and that got the whole industry into a frenzy. There's a lot of comments going back and forth. Industry just went into a frenzy over it. So DFARS in January 15, 2010, proposed a rule, the Business Systems Definition and Administration. This rule was designed to clarify applicable business systems and establish penalties for deficiencies. So it clarified that the business systems that they would use would be accounting, estimating, purchasing, earned value management system, which is called EVMS, government property, and material management system, MMAS, for acronym there. So they issued that January 15th, and then they had tons and tons of comments. The industry was all up in arms about it. So government organizations strongly supported this rule, while industry strongly objected to the proposed rule. So what happened in December 3rd, 2010, DFARS proposed a second rule. This is a final redraft of the business systems regulation was issued. They proposed proposed thresholds based on the business system. They applied penalties they adjusted penalties for deficiencies, and they provided for a time-scheduled remediation process. So that was December 3rd. So now on May 18th, they actually issued an interim rule. So this adjusted penalties further, and they clarified and made them for significant deficiencies as opposed to just deficiencies, which is somewhat subjective. They eliminated the $50 million threshold that they established in the second proposed rule and applied the business system rule to contractors that are, quote-unquote, CAS covered, or when the contract has specific clauses. So they actually made it more, they reduced the threshold limits, applying the business systems rule to more contractors. We'll get into that in a second. So that's the regulatory timeline. So right now it's July, and you may be listening to this a few months down the road, but for right now, we're at the interim rule has been issued. It's now, the rule has been able to be enforced. We'll get into that. But the industry is obviously paying a lot more attention to this now because there's penalties being applied. Okay, so what does an interim rule mean? Does it mean it's real? Does it mean what can happen? The government has made regulations very hard to follow with two prior proposed rules and now the interim rule. The interim rule puts the regulation into effect now, but still allows for a comment period. So what's the government going to do to respond to this comment period? Based on the most recent responses to comments from the second proposed rules, it appears that the government has taken a firmer stance on solidifying this rule. We don't anticipate too many changes to the rule, if any. We actually also anticipate a much shorter turnaround time for the government to respond to comments and ultimately issue the rule as final, and we project that final issuance to be in the fall of 2011. But it is very important to note that the interim rule applies to solicitations issued on or after May 18th, and contracting officers are encouraged to amend existing and new solicitations to include this clause. So this means that the rule is now able to be enforced and penalties may apply for deficiencies found. So why is the government doing? What's their purpose for applying all these rules and making everybody scramble and do all this work? In their words, contractor business systems and internal controls are the first line of defense against waste, fraud, and abuse. Weak control systems increase the risk of unallowable and unreasonable costs on government contracts. So that's their rationale, and it's hard to argue against strong controls and prevention against fraud and waste and abuse. However, there are a lot of requirements that come along with this, and we'll get into that. Okay, so next, so the DFARS Business System Definitions and Administration. So this is this is basically the thresholds. This is when the rule will apply. So the clause says, use a clause at 252.242-7005, contractor business system, in solicitations contracts, in contracts with educational institutions or federally funded research and development centers. So that's other than those, I'm sorry. And when the resulting contract will be covered as defined in 242.7000, that's the CAS covered, and we'll get into that. Or when the contract has any of these following 6 clauses. That's cost estimating, earned value management, material management, accounting, contract purchasing system, and property management. So CAS covered or any of these clauses, your contract, your business systems will be subject to this regulation. So initially, in the second proposed rule, they described a $50 million threshold, but the interim rule has altered that significantly. So they say the rule applies to CAS and modified CAS covered contractors, so anyone that has 6 clauses, and most likely, if you have the FAR 52.232.5, payments under fixed price contract, or 52.232-32, performance-based payments based on the schedule of values, the contractor will probably be impacted by this rule. So there's a lot of different ways the government can make you qualify for the business systems rule, either CAS or modified CAS covered. You have any of these contracts, or you receive pay, or you bill the government based on a schedule of values or progress payments. So those things you most likely will have contracts that qualify you for the business systems rule. That's why I said this severely impacts the construction industry, because most of you guys bill under a schedule of values or progress payments. So this is it's pretty key. But the rule doesn't apply to contractors who've been deemed a small business or educational institutions or federally funded research and development centers. So that's where they exclude those. So what is CAS coverage? It's a set of 19 standards and rules promulgated by the U.S. government to determine costs on negotiated procurements. So if you have CAS coverage, a company may be subject to full CAS coverage, required to follow all 19 standards, or modified CAS coverage, which are required to follow standards 4.1, 4.2, 4.5, and 4.6. So there's either full CAS or you're exempt from CAS. Full coverage applies only when your company receives either one CAS covered contract of $50 million or more, or a number of smaller CAS covered contracts totaling $15 million. In addition to complying with the 19 standards, the company must also file a disclosure statement which spells out the county's accounting practices, such as if it has certain costs is treated as direct charge, contract charges, or as part of overhead expense. So if you're CAS coverage, not only do you have to follow the business systems rule, but you also have to do a whole bunch of other stuff, namely the disclosure statement. Now, if you're modified CAS coverage, that applies when a company receives a single CAS covered contract of 7.5 or more. So that's a much, much lower threshold. So you have a single CAS covered contract of 7.5 or more, you apply for the rule. So should a contract be full or modified, business systems rule will apply. So let's talk about what's exempt. Some contracts are exempt. Small businesses, we mentioned that. Any contract less than 7.5 is exempt, providing the company has not been awarded a contract greater than 7.5. And also a contract less than $650,000 is always exempt. And this is just from CAS coverage. Firm fixed price contracts for commercial services or supplies, contracts awarded under sealed bid procedures where adequate price compensation was performed, contracts where the price is set by law or regulation, contracts awarded to foreign governments, and contracts where performance will be performed entirely outside the United States, including territories and possessions. But it is important to remember, you have all these things about what are exempt from CAS coverage, but it's important to remember that a contract may still have the business systems rule applied, even if the contractor is not CAS coverage. So through inclusions of any of the 6 clauses that we talked about, or even if you have progress payments or scheduled values payments, you may have to contend with it as well. So there's a lot of ways they can get to you. So let's talk about the business systems, what they are and what's going to be required for you. So you need to have effective internal controls for these systems. Accounting, there's 6 subsystems under accounting. So it's not just basic accounting. You have a billing system, you have a budgeting system, labor system, compensation, indirect cost, and EDP controls. EDP is your IT controls. So there's a ton of requirements that apply to that. So it's not just in overall accounting, it's 6 subsystems of accounting. And there are very detailed controls regarding those. Estimating, you need to have an accessible system which provides for use of appropriate source data, sound estimating judgment, a consistent approach, and adhere to established policies and procedures. You also need your estimating system to interface with the company's budgeting and planning system. That's something I've run into, or I've not seen too many estimating systems linked in with the accounting system or the scheduling system. That's a new requirement. That's something that many companies are going to have to do. For purchasing, you need to have a purchasing and subcontracting system, which includes make or buy decisions, vendor selection justification, price negotiation, internal audits, training, management reviews, etc. There are a lot of requirements around purchasing. I'm surprised to learn how many there were, but this is an area where you could say, hey, we may have to do these things, but we're getting our house in order in doing so. We're leveraging our spend. We're checking out our vendors to make sure we're good. There's a lot of good stuff in here as well. I wouldn't want to just say it's just tough compliance work. There's actually some stuff that can save you some money. We'll get to that in a little bit. Government property. This is your fixed assets. We need to ensure compliance with government property clauses of the contract. It could be government property. They basically want everything that is either fixed assets or the government has purchased to give you as fixed assets. They want those things under general ledger control, which a lot of companies don't have. So, earned value management system. This is a new system. It's been around for a while, but the industry is really up in arms about this because it's challenging to implement in some cases, especially for construction firms. Describes the company's approach to program organization, scheduling and budgeting, work authorization, accounting, indirect cost management, managerial analysis, and corrective action. It's basically ensuring that what you're billing for the government has been scheduled, has been worked, and has been implemented before the government pays for it. It's a simple concept, but there's a lot of things that go into it. You need to integrate your systems, your scheduling into your accounting, your budgeting. You need to have variance analysis to confirm to the government that you're running on budget, or if you're off, why you're off. You need to have significant work breakdowns, so you're not just lumping, say your subcontractors. You actually have to break down your subcontractors' work. So we'll get into that a little bit, but there's a lot of things around earned value management. Material management describes a system for planning, controlling, and accounting for the acquisition, use, issuing, and disposition of material. So this is a lot around inventory. A lot of you guys won't have to deal with MMAS because you don't really have inventory, but there are some companies that will have to contend with that. Okay, moving on. The interim business system has severe consequences for significant deficiencies. This is a very important slide. This talks about what you're going to do and what you have to contend with and what are the consequences for not complying. The government prescribes control objectives for what they deem to be acceptable elements of a business system. So there are 100 control objectives for the 6 systems. So each control objective has at least one, but mostly generally has more than one key internal controls associated with each control objective. So let's think about that. You have 100 control objectives over 6 systems, and generally you have more than one key control for the 100 control objectives. So you may have 300 controls, 200, 300 controls that need to be in place to really meet the government's control objectives. That's a lot. It's a lot of work. So what the government deems a significant deficiency, they define as a shortcoming in the system that materially affects the ability of DoD officials to rely on information produced by the system and needed for management purposes. That, in my mind, this is my note. This definition is very subjective and appears to be open to some interpretation by the government. So if you're not meeting one of those control objectives, the government may say that's a significant deficiency based on their definition. So if you do have a significant deficiency, what happens? They can withhold 5% of your contract payments until remediated, with cumulative withholdings up to 10% for multiple significant deficiencies across multiple systems. So you had a deficiency in accounting and purchasing. So the 2 significant deficiencies, you'll have 10% of your contract payments withheld. And I don't know about you guys, but that's a lot of money, in my opinion. If you're a construction firm, engineering firm, say a construction firm, you're operating on a 2 to 3% margin, and you have a lot of subcontractors to pay, that severely affects your cash flow. So I think that's why this is getting so much attention. Is your cash flow could be really impacted, and you have to remediate until you can get your money back. So it's a pretty big deal. So payments could be withheld under interim payments, under cost reimbursement, incentive type, time and materials, and labor hour contracts, progress payments, and performance-based payments, as we discussed. Okay, let me show you real quick an example of a report I've done on the business systems rule. I've taken out the name of the client just to make sure. But this is just an example of what we've done as a report for a government contractor. So diving in real quick, these are all the accounting systems. But let me get you started from the top. All right, so we talk about our approach, our agenda, our report of observations, our scope. Here's our project deliverables. We delivered procedures and manuals. We also delivered flowcharts and narratives. This is what allows us to perform what we call our gap analysis, where we say, here are the control objectives of what the government wants. Here's where you are. Here's the gaps. And this, essentially, for these key systems, we perform this gap analysis. So accounting, estimating, MMAS, purchasing, government property, and EVMS. So here's an example. Let's just take one from a particular area. DCAA control objectives. Organizational DCAA, for everybody, is the Defense Contract Audit Agency. They're the ones that would come out and audit you and make sure that you're ready to go. And they will be auditing you based on these control objectives. So if you look at the first one in bold, organizational design is established for independent governance, i.e. board of directors, audit committee, etc. So this particular client didn't have a government compliance oversight function. So that was something they had to do. They had to establish government compliance oversight function, expand the internal audit review procedures process to ensure that the accounting system abides by ethical standards, is regularly reviewed to demonstrate the system is operating as intended. Okay, so that's just kind of the environment. Now we got the billing here. We got to make sure that adequate policy and procedures and training for personnel submitting billing requests exist and are reflected throughout employee work. So what this company had, they didn't standardize their billing processes across regions. They had multiple regions. In some cases, they automated it. In some cases, they had manual. The government doesn't like that. They want to see one standard process. That's a key finding there. Budgeting and planning. I'll talk about one highlighted here. Say performance against budget is monitored on a regular basis and variances are identified. So this company needed to provide an audit trail for budget revisions so physical documentation existed of audit occurrences, audit findings, and action taken to correct those findings. Labor. Now this is one where they really had some real weaknesses. In labor, they needed to, labor authorization / approvals exist for determining proper cost reimbursement on government contracts. Work authorization and job assignments are controlled and issued independent of those responsible for performing the work. Government's really big on the labor accounting control objectives. So those are two key controls we talked about. And this company really needs to work on their labor system controls. They need to create a direct and indirect labor allocation system to effectively identify accounts for labor charging in accordance with federal regulations. They needed to account for unallowable costs. They needed to account for overtime. They needed, basically, there are some other things. They need to create and implement a process to document and approve time card corrections. They need to develop a process to sufficiently document to support the direct labor charges. There were inconsistencies per job all around the board with their approvals, how the standardization between direct and indirect. A lot of different work needed to be done. Indirect and other direct costs. Ultimately, they needed to revise their entire indirect cost accounting system to establish procedures to identify indirect and other direct costs as allowable or unallowable. They need to ensure indirect and other direct costs are allocated consistently under CAS 403, 410, and 418. They need to define a clear process for consistent development and application of overhead rates applied to jobs. They didn't do that hardly at all. They basically wanted to charge everything direct. And they developed an indirect rate model that operates as part of the financial month-end closing. Very key parts. They also had some findings on compensation and information systems. They needed a lot of procedures around information systems. So let's get into estimating. I'm just kind of giving you a quick example of some of these. So one here, the estimating system controls, they needed to interface their system with their estimating system with their ERP system to carry a forward estimate to their program budgeting. Variances needed to be explained. The government wants to make sure you're using historical pricing data to assist in the generation of estimates. So you got to interface your accounting system so it feeds into your estimating system, so you have actual data by which you drive your estimates. And the government wants to see that, and they want to make sure that you are able to see that through having your systems interfaced. Some pretty interesting things to think about. MMAS, this company really didn't have too many considerations. They needed to do more of the procedural documentation around this, considering that they were a construction firm that didn't really carry inventory. Purchasing, they needed to do a lot of work. In this particular case, they needed to establish a strategic sourcing procurement function that negotiates and processes the purchase of competitively priced materials. They need to implement, they could implement the usage of P cards for field purchase orders. That was they didn't have to do P cards, but they had this process called field purchase orders that just bypassed a lot of the internal controls, and we suggested the use of P cards to kind of get that under wraps. Government property, they needed to enable one of their system modules to be able to effectively track the fixed assets, and they needed to implement predetermined rates for charging equipment to government contracts through an equipment and supplies subdivision of theirs. Earned value management, they pretty much needed to create an earned value management system whereby they had to expand their work breakdown structure for subcontractors and a standardized cost scheduling process to utilize one cost scheduling software across the regions. They interface their scheduling software with their ERP system. Tons of stuff they needed to do. Some stuff for human resources as well. So this just gives you a quick example. And we have some process enhancement improvements, but here's an example of our roadmap that we lay out for this improvements. Here's what they need to do, and that's pretty much in a nutshell how we take it. So let's get back to our regular presentation. One sec. Okay. So what's the timeline on enforcement? The initial business systems rule has been out for years, but now the interim rule is established. Is it going to be enforced? You know, a lot of people have been reluctant to touch base on this because to really enact anything, because they've been, you know, there's really been so much hemming and hawing in the industry, so many new regulations. But now, since the rule has been so contentious, regulators have been spending their time clarifying and adjusting the rule, but times are changing. As indicated by the May 31st, 2011 amendment to FAR Part 42. This basically says it amended the contractor administrator's duties to ensure that the contract administrator has implemented the requirements of 52.203.13, Contractor Code of Business Ethics and Systems, that business rule. This rule adds to the list of contract administration functions the function to ensure that contractors have implemented the mandatory contractor business ethics program requirement. So not only are they saying we're going to reinforce it, we are added it to the job duties of the contract administrator. Pretty big deal. So the Defense Contract Audit Agency will most likely begin their audits on behalf of the contract administrators after September 30th. That's what we anticipate because their fiscal year is up then, their budget year is up, so they have to create their audit plan for the entire year. So starting in October, we anticipate a lot of time being devoted to business systems compliance. So what does that mean for you? Before October, you have a few months to really get in compliance before the DCA starts sending out their auditors to check out your business systems compliance. So what do we, here's our approach. This is what we think you need to do in order to get ready for the business systems rule. First of all, we think that you need to do a quick risk assessment, perform a high-level review which identifies your exposure for noncompliance. So what systems would really need your focus? Where are you good? Where are you bad? How much exposure do you have? How much would it take to really comply? So then the next step, suggest, is a actual gap analysis. And that was one of the things that you saw that I was taking you through, is you perform an as-is process review for the 6 business systems. You identify gaps against the DCA control objectives, and we make recommendations. So you actually determine step by step of those 100 control objectives, where does this company actually stand and what do they need to do. Additionally, and very important, you need to develop and update policy and procedure manuals and process documentation to comply with the requirements. We have it on good authority that the DCA will perform mini audits, which will focus on verifying that the proper documentation is in place. So they're going to go out in droves, and they're going to do these 3 or 4 day audits where they're going to come in and ask you if you have any documentation on this stuff. And if you don't, they're going to say, thank you very much, and walk away and write you up. But if you do have the policies and procedures, this will be your first line of defense against the DCA. This will satisfy those initial requirements that they're going to come looking for. So if you don't have the proper policies and procedures documented, that would be your first step to do. And you have to do the gap analysis to identify what those policies and procedures are. Okay. Then we suggest, so you got your risk assessment, you got your gap analysis, and then you perform your documentation. Next step is to form a roadmap to remediation with the actual fixes. They should be prioritized and planned, given the sequencing, level of effort, and critical requirements associated with them. Remember that roadmap that I showed you? Let me flip back to it real quick. This is an example of what we'd recommend doing. This is an example of a company's roadmap of all the actions they need to take to get into compliance. This prioritizes, talks about the level of effort and those types of things. Okay, and then the next step would be actual implementation. Is actually implementing the required changes in people, process, and technology to gain compliance. Okay, so let's talk about consequences and benefits before I let you go. So obviously, there's severe consequences for noncompliance, but there's also some benefits to avoiding not only just avoiding penalties, but there's some good things for your business, but we'll get to that. So payment withholding will commence after the contractor officer's final determination of disapproval of the contractor's business systems. So if they disapprove your system, you're going to be charged at 5% for significant deficiency in one system, 10% for significant deficiency in 2 or more systems. For construction firms that often work on small profit margins, like I said before, need to pay subcontractors, this withholding amount is substantial and will severely affect your cash flow. So nobody really wants to deal with it. But let's talk about the upside for doing this type of work. Despite common belief, there's certain benefits for performing it. We certainly identify a significant amount of process improvements or efficiency gains in going through this process. Myself, I'm an accountant, a CPA, but I'm also a management consultant. So in prior engagements, these process enhancements just pop out at us, and you get that from your processor or manager level people. You hear their ideas. So it's not just our ideas; it's your people's ideas that we're communicating to you as well. There was the recent job that we were on. The process enhancements basically paid for the cost of implementation of the company. Pretty interesting stuff. Additionally, you'll have improved documentation of policies and procedures, which more likely than not you'd want to do anyway. Now you also have something else. And this is a nice consideration. It gives you a competitive advantage for future government work. there's going to be a handful of those out there that are going to say, you know what, we're not really players in the government market. We've dabbled in it, but this just isn't worth it to us to really get into it. So because of these business systems rules and the cost of implementation or the level of effort of implementation, we're not going to deal with it. So we're going to remove ourselves from that market entirely. So this does, getting in compliance with this stuff gives you a competitive advantage. You pass their test, and you make it into a whole other section. Additionally, you have enhanced controls. Let's not forget that's why the government's doing this whole thing. So a strong internal control system will be implemented, and it'll improve on overall effectiveness, and you reduce the opportunity for waste and fraud within your organization, which, you know, I'm sure some CFOs out there really like to hear that. So that's a good thing. This really is a good thing. Now, I know this is a big effort, but at the end of the day, it's not something you want to ignore. You know, at the very least, I would want you to go away with that message. The business systems rule will have an impact for your organization if you're doing federal work or even state work, state or local in some cases, and you most likely will have to contend with it in some form or fashion. So I would say, you know, let's get in touch with someone that's familiar with it. If you have any questions, you know, my number is right here. I'd be happy to talk with you. You can shoot me an email anytime. But, you know, our job at Auxis is to help people get in compliance with this business systems rule. And what's nice about us is we can perform this gap analysis for you, but also we can do the implementation work. We're not an attestation firm where you can only do the certain amount, but we can't do the implementation work because we're not restricted in that format. We're also partnered with the industry leader in this group is a man by the name of Brian Simmons. Him and I have worked together when I used to work for Ernst & Young's Government Contract Services, and now he's on his own, and Auxis is partnered up with him. And you know, we're able to do this without, you know, at a cost affordable rate, considering that we don't apply the big four overhead charges to our rates. So that's the business systems in a nutshell. Hopefully I haven't taken too much of your time, but I would encourage you to get in touch with me should you be interested in hearing a little more. I can certainly listen to whatever arguments you have about where your company is, see what your thoughts are, and give you kind of my thoughts on it. Please do give me a call, and thank you so much for your time and effort. Appreciate it.
Thank you, John, and thank you for all of our attendees for joining us for the webinar today. Please stay tuned for more webinars from John and from Auxis on this topic and others. Enjoy the rest of your day.